welcome to the India Development Debate. I'm Tamanna Inamdar, and it's been a very newsy day. We have a great show lined up for you. Right on top of the show, we're going to begin with news you can use, something that has caught all of our attention. Gold at 50,000 rupees per 10 grams in India. What's going on? Why these dizzying heights for gold prices? How long can they sustain? And what are the fundamental reasons behind all of this glitter? That big story coming up first, where we'll dissect all of those features. We're also talking to top economist Arvind Panagriya, who's joining us exclusively today to decode the prescription for India to become Atmanirbhar, what the true answer would be to reducing our dependence on China, and where our economy is headed next. A very important story that we'll also cover on the show today is about how it's now clear that to be lovely, you need not be fair. It's a decision that should have been taken a long time ago. It's been a long time coming, but finally, iconic brand from Hindustan Unilever, Fair and Lovely, will no longer be called Fair and Lovely. It's an impact of the Black Lives Matter movement in the United States, and it's long overdue in India. But will just changing the brand name of one product be enough? That discussion also coming up. But first, let's begin talking about gold. Gold has hit 50,000 rupees per 10 grams in the last couple of days. There was a bit of profit booking, but it's hovering around those dizzying heights. Gold prices have also been increasing in global markets. In fact, over this year, there's been a 16% jump in prices globally, 23% jump in India as well. But is there enough demand to sustain it? Will gold prices hold at these levels, and what are the reasons? Take a look at this report.
The Indian love for gold is well known, and for many, the obsession with the yellow metal has paid off. Retail gold prices have crossed the 50,000 rupee mark per 10 grams, marking a rise of 23% this year. But why are we seeing a rise in prices? We all know that customer expenditure has reduced because of the uncertainty caused by COVID-19. But perhaps that's one of the reasons why people are flocking towards gold, long considered a safe haven for investors. Fears of a second wave of the virus and a global economic slowdown have only made it more attractive. Meanwhile, gold prices in India have outperformed global rates because of a depreciating rupee and import duties. So if you're an investor, should you also become a part of this gold rush? Equity investor and commodity guru Jim Rogers says that he's bought a little bit of gold, but he's not buying a lot of it.
I have bought a little more gold. I'm not buying a lot right now because certainly in Asia, many people are having to sell their gold and silver to eat. You know, these are hard times in some places. So I am waiting. I would suspect maybe later this summer.
On the other hand, Mohammad El Erian, the chief economic advisor at Allianz on our show The Market, believes that gold works well as a mitigating factor.
It's very difficult to find a good risk mitigator in this world. Central banks, through financial repression, have taken interest rates on the safest assets to either ridiculously low level or to negative levels. And therefore, you have to look for alternative diversifiers, and gold plays a role here.
But with COVID causing a reduction in disposable incomes and the social distancing norms preventing our usual big fat Indian weddings, will Indians even be interested or be able to afford buying gold at these levels of 50,000?
And speaking to us now to understand and explain what this gold rush is about and how sustainable is it, I'm joined by PR Somasundaram. He's the MD India of the World Gold Council. I'm also speaking to Prithviraj Kothari, National President of the IBJA. Welcome to both of you, and thank you for talking with us today on the show. Mr. Somasundaram, let's begin with you explaining for all of our viewers why we're seeing this spike in gold at these levels. Because we know that the coronavirus fears have been around now for quite a few months. What has been the trigger right now?
International prices have also gone up in recent days. Okay, it's actually crossed 1750. And it's all got, even pre-COVID, if you really see since last August, gold prices actually started seeing a jump. And it's primarily related to the interest rate scenarios across the globe, driven by the US interest rate, which is almost zero, and a lot of sovereign debt in the negative yield territory. So that started the momentum on the gold price. And then it opened up this year with again a similar kind of increase, and there was rupee depreciation. And on top of it, now we saw COVID, where the fear and anxiety is driving people to gold. So a little bit to do with the immediate, the flight to safety demand, and a lot to do with the international prices, which are driven, as you said, by the interest rate scenario and the geopolitical anxieties all over.
That was what I was trying to understand, Mr. Somasundaram, that the geopolitical anxieties have been around for a while. Is it fears of a second wave in the United States that are driving international prices, and that's what we're seeing back home as well?
Well, I wouldn't specifically say it's to do with the second wave, because Corona, as you rightly said at the beginning, that has been with us for a while. And if you really are, following the news, everybody has been saying that, till the vaccine comes out, there is not much of immunity and it might come back. So all kinds of news we have heard. I wouldn't probably put it entirely at the second wave or anything like that. Certainly there is a lot of anxiety, but if you really see, even the stock markets have been doing well. So it's not that gold is doing well at the cost of other the equity markets or debt markets. So that's a very important thing to understand in the current scenario. There are definitely issue of a lot of money flowing, the fiat money, and this was to be expected, that gold price will go up when you pump in more money into the economy.
Yeah, absolutely. Mr. Kothari, give us a perspective of what we're seeing in India right now. We know Indians love their gold. We've been seeing, the spike in prices, and of course our domestic prices tend to be higher because of import duties and currency fluctuations and all of that. But is there any real demand to back it?
No, in India, it's almost 12.5% of a custom duty and 3% of a IGST. And if you see the demand in India, it's in the post lockdown period, there is a demand from gold ETF, huge demand in gold ETF, almost in a month of April and May month, almost approximately 2,000 tons, 2,000 crore rupees gold accumulated in gold ETF in India. And also the government selling the gold sovereign bond, which comes from April month, May month and June month. It means approximately 3,200 crores people buying gold, and in terms of 6.73 tons of a gold. It means in the high prices, people are more investing in gold, both the segment. And also if you see in the physical side, still there is no disparity in the market. Market is still $10 to $15 only discounted. Initially, we think that a lot of people are wanted to sell gold in the market and get cash money, but its effect very negatively. A lot of people are still buying the gold jewelry, bar, coin, and still we are importing goods from the outside of a country.
Kothari, I want to understand from you, what are the actual trends that we are seeing in terms of demand? Do you think that some will come from the wedding season, because this theory is doing the rounds that since there will be great savings on hosting people and big receptions, more money will be put aside towards buying gold?
No, if you see in a now current scenario, I think marriages season, or maybe in the rainy season, festival season, I think import and the sale should be dropped down to 30 to 50%. If you see in the last, before the COVID, the liquidity crisis, huge liquidity crisis in the market in everywhere. So I think import should be dropped down. The sale of jewelry also should be the drop down. If you're in the marriage season, now the whole scenario should be changed. People, the thinking they're changed. Their lifestyle should be changed. The gathering of marriages should be changed. So everything, I think, is effect on the market scenario. So I don't think so. Now it's happening. Should be slow down everything.
Okay, Mr. Somasundaram, let me get a perspective from you on trends. Where do you see the trends going? We've already seen some kind of profit booking in the last 48 hours or so after prices hit highs. Do you see these kind of price levels sustaining?
Well, as you know, we don't forecast the prices, but if you really see the broad movements across the globe, the kind of economic pressures we are seeing across, COVID has still not been fully accounted. Let's be very clear. The globe is in the midst of COVID, and the accounting will be done later.
True.
What exactly is the loss will be accounted later. People are still fighting with it. So that's once that becomes clear, then the asset prices across equities, gold, real estate, everything will get readjusted. Right now, we are in the midst of it, so the equations have all changed. It's very difficult to see both equities going up and gold going up, and it's a little strange equation now. But we'll have to wait till the COVID accounting is done. I mean, impact is done after this. But coming back to the trends, I think you see in India specifically, price does not always drive the demand. It drives the demand in the very short run. Incomes drive demand. Okay, so we have studied this very carefully over 25 years. Income has a greater influence on gold demand. A 1% increase in income leads to a 1% increase in demand. A 1% increase in price leads to a 0.5% decrease in demand. So what that shows is the influence of incomes is higher on demand. That's what Kothari ji also spoke about in terms of rural incomes, rural demand, etc. So the point we see right now is this year, certainly people would have saved a lot of money because, I mean, I'm saying other than the people who have migrant labor, etc., the salaried people, etc., may see their wealth going up because the expenditures have come down in other places. Now, how much of it flows into equity? So that's a good, possible tailwind for gold. On the other hand, unorganized labor have lost their jobs. So that is going to be impacting demand. And they do, in small quantities, they drive demand in a very big way. Weddings are going to be shorter affairs. Now, you yourself rightly asked, so does that mean that the expenses saved will flow into gold, or people will not buy that much gold? All these are up in the air. It's a huge behavioral change we will see if that happens. Unlikely. There are 12 to 15 million weddings in a year in India. They're not going to disappear. So they will come back. But immediately, if you see the second half, we'll see a spurt in demand as compared with the first half, because first half is a complete washout. But will it achieve the levels of the last 5 years, average levels during Diwali, etc., at these prices is a little difficult to say at this moment. The entry barrier at 49,000 and 50,000 is very high. People's incomes haven't gone up that much. But gold price has risen severely, I mean, very, very fast. So you will see some impact.
Okay, the question is, are these prices sustainable? Now, a lot of viewers watching this want to know a couple of things. Are these prices sustainable? Will they go further? And you talked about, savings flowing into gold. Does that make sense? Is that a good idea? Mr. Kothari, you want to give your take on that?
Yeah, always the gold prices should be higher. If you see in the US market, now in the USA, every day they create in gold ETF 23 ton, 7 ton, 6 ton. I don't think in India is the same trend. If anyone have a money, they can buy. Still, a lot of people are waiting to come down for at least 45 to 46, 47,000. There is huge demand in India. I think Indian demand should be as usual as this year also. But when it's come, I think when the corona is over, then demand should be pick up high. People don't think about the price. People always in Indian people see the The train, how is the train? If the train is the higher side, people buying more and more gold.
All right. So, Mr. Somasundaram, do you also see a lot of people maybe looking for gold loans? That's the other space that is important to look out for. Will we see a return and an upsurge of gold loans with prices at these levels? Because, Indians don't like to sell their gold, but in dire times like this, and a lot of people are going through dire times, gold loans could become popular again.
Yes, gold loans have always been popular, and our expectation is that this is going to see a phenomenal growth in this year. In fact, it is a unique thing for India because it helps people to not sell gold, but create temporary liquidity and also access bank credit. Let's not forget, banks are big lenders against gold. They are, in fact, about 65 to 70% of gold loan is in the organized segment is held by the banks. NBFCs, of course, have grown faster. They hold about 30%. So, and now we see all the banks are also gearing up to give gold loans in a big way because it's also quite, in a sense, in terms of the risk profile, it's a little low. Probably they perceive it that way, which is good. So we do expect this will grow, and even small businesses could use their gold to actually create liquidity. So we are very, very bullish on gold loans, which is one of the positive features in this whole thing.
Yeah, absolutely. Well, all that glitters may not always be gold, but in this case, it definitely is. Thank you to the two of you for joining us today on this first segment on the India Development Debate.